Hello from Otet markets. This is Ahura and we'll be with you with the global economic outlook in the week ahead, the week number 19 in 2025. As always, first let's check what we had previous week and then we can go forward and see the week ahead and what we can expect from the markets. Previous week we had two most important data to watch: U.S. economic data, especially the GDP and personal income and spending data in one hand, and on the other hand, U.S. labor market data. While the Japanese central bank also held the rates at 0.5% or 0.50 basis point, as it was widely expected. About the U.S., we can say that the data somehow they were some kind of the mix with the inflation easing, personal income and spending increasing, while the labor market also is showing some weakening signal. However, the unemployment rate was steady at 4.2%. These data numbers says that the geopolitical tensions and trade war already affected the market. While we have some positive data in one corner, in another corner we have concerns. So generally, what we can understand from this market is that we have to be more cautious. While in the earnings calendar we had too many data so far, the companies, they more than 71% of the company, they beat the expectations. It was somehow better than expectations that we had at the beginning of this earnings season. But however, while the companies, they beat the beatings, they beat the earnings expectations, but some of them, like Apple, so like Amazon, they lowered their expected income for the next 3 months for and overall 2025. This data says that in the production side, in the service sectors, in all sectors, while we have the tech companies in one hand, like companies like Boeing in other hand, all the companies, they already affected with the trade war and the geopolitical tensions, and they lowered their expected income. So again, adding these to the previous data that I mentioned earlier, all of them, they say that the geopolitical trade tensions and trade war probably will be the most important market drivers for 2025, even at least until the next things comes up. But for now, these two events, they should be watched more closely. Week ahead, we have two central bank meetings in United States and United Kingdom, but still we have other data also to watch. Let's start with United States. On Monday, we have consumer, we have service PMI numbers. Generally, this week we will have the service PMI numbers not from the US, from most developed and developing economies. From the US, service sector should be stable around 51.2 as it was in March. But generally, we can say that market currently shows that after that, we know that the service sector, it was service sector should slow the slide to 50.6, sorry, from 50.8, but composites PMI should stay unchanged at 51.2. We know that several months ago we had the service sector improving, but manufacturing sectors, they were under pressures. In the last 2 months, the manufacturing sector has slightly improvement, but service sector started to get weakening. Now we're expecting to see that the both service and manufacturing sector slightly slow down in March and April data. So that's why we say that service sectors probably also can increase the concerns that we had on the GDP and other economic data that previous week we had. As mentioned, previous week we had a weaker than expected data, especially the GDP also in the first quarter in the initial expectations, it fell by 0.3% in the first quarter. The other thing that we have to watch in United States, as always, is the Thursday's Thursday's application numbers to get the unemployment benefits, or initial and continuing jobless claims. We expect to see that initial jobless claims to slowly slide lower to 235,000 from previous week's 241K. However, the Tuesday and Wednesday U.S. Federal Reserve meeting will be the big event and will be the very most important event in news that we have to follow. It starts on Tuesday and will end on Wednesday when there we will have the statement and also the press conference. While the market already counted more than 98% on holding the current rate, so the surprise wouldn't be about the interest rate decision. We expect to see that interest rate to stay unchanged at between 4.25 and 4.50%. However, the important thing is that the Fed Powell's press conference in the answers that he is going to give the reporters, while on Thursday and Friday, next 2 days also, we have too many other Fed speakers that we have to watch them more closely as they are going to give us more data on what happened in the meeting before after 2 weeks, before this next 2 weeks that we'll have the Fed meeting minutes. But right now, these two they as the Fed speakers, they're going to give us much more important data on why Fed decided to hold the rates, or when probably the rate cut cycle gonna start. And these data and these news, they will be most important news and things that we're gonna understand from Fed speakers and from the Fed Chair Powell's press conference right after the meeting as well. Out of the US, we expect what with this data, we expect the Fed to hold the rates and talk about the meeting by meeting cutting rates. So it's not going to we are not going to have actually some hawkish comments from the Fed. Probably we will have more dovish comments which can support the stock markets and put the pressure on the US dollar index. Wait and see what's going to happen, but that's the overall expectations. Out of the US, the most important event is going to be the UK central bank meeting, or Bank of England monetary policy meeting, where we expect to see 25 basis point rate cut, and all 9 members are going to which is expected to vote for this rate cut. So all 9 members expected to vote for 25 basis point rate cut and bring the interest rates lower. However, what we can to 4.25% from previous 4.50%. However, this besides this, which is expected to be happen, the Bank of England is going to publish its monetary policy and economic expectations as well, which is very important to be watched. We expect to see that the Bank of England is slightly lowering its expectations for economic growth, the United Kingdom economic growth. Generally, we expect to see a little bit this pessimistic or negative the economic expectations or prospects, which is going to be affected negatively in British pound. Also, as mentioned, other economies also going to publish their service sectors purchasing managers index, and mostly we expect to see the weaker data from most developing economies in the service sector as well. But Chinese trade data also will be another important point that we have to watch closely. China's export, especially export, increased much better in last 2 months, as many economies they started to buy before Mr. Trump's tariffs going to affect the markets and going to affect the prices. So the Chinese export increased largely, which is expected to continue in April as well. Before we know that in April 2nd we had a new tariffs, but it's applied a little bit later. That's why from April 2nd till starting this new tariffs, we had more imports in the United States from China, not just in the United States, some more other countries as well, which added the export in China. So that's why we expect to see the Chinese export to increase by more than 12% in April, but imports going to fell by more than 4%, which means that Chinese domestic demand is still getting more concerned, so it's going to put more pressure on the inflation. It's not going to be a good news for the Chinese generally the economy, especially we know that this export also to more than 12% export also is not something that we can count on that for long term is we know that it's seasonable, it's seasonally, and it's for this month, so I'm looking to happen for this month. So that's the most important data that we're gonna have the next week. Let's check the charts and see with this data what we can expect from the charts and how the chart's going to react to these numbers and these data. Starting with the US dollar index, we know that the dollar index after NFP numbers, which showed that unemployment rate was steady at 4.2% and more than 177,000 newly created jobs, which was better than expectations. They somehow supported the dollar index, but generally the other data, which lower economic growth in the first quarter and other negative data that we had from the US economy, they put the pressure on the dollar index. That's why our previous expectation of recovering till 101 mark has changed to recovering to 150, around 150 mark. And generally, in midterm, we expect the US dollar index to move between 98 and 100 marks. We are not, we cannot actually change our expectation with the current data and events that we expect to see in the markets. As the geopolitical tensions still stir and continuing, especially after weekends Houthis attack to Israel, the Ben Gurion, in Israel's airport, Ben Gurion was attacked by Houthis missiles, so that can increase the market tensions, especially in the Middle East, which can increase the demand for market risk, can increase the demand for the safe havens, especially for the gold. So another geopolitical tensions, trade war also is continuing. Previous week or last week, we had some reports that the Chinese officials told that Americans gave some signals that probably they are interested in trade talks. So we're going to have the trade talks soon started. However, we have to see the trade talks to be started between China and United States. But till that, the market is uncertain until even thought the negotiation starts. Until we have the answers and until we have the results, the market tension is still high. That's why still it can increase the demand for the safe haven. However, that news by itself made the gold price to slightly lower, go lower in previous week. For the week ahead, central bank meeting. And most importantly, the trade talk is going to be the main market driver for the gold. On the oil front, as the geopolitical tension increases in the Middle East, we can probably see some jump or some increase in the oil price, but generally the lower economic growth, global economic growth, can still put the pressure on the oil market. That's why for the stock markets also, while despite previous 2 weeks increase, we are not still satisfied about that bullish trend can continue further. So most probably we can see that if the price cannot hold itself, I mean S&P 500 price cannot be held above 5,600 or above 5,700, we can say that this downtrend still again can start it, and we can see S&P 500, Dow Jones, and Nasdaq, generally all of them, to reverse to the overall slightly downtrend. Otherwise, if the news becomes some positive, we get to some positive news, more encouraged by trade talks and stuff like that, holding about 5,700 can open the door for 5,800 and more or higher digits. Otherwise, still the general expectations is to see the stock markets under pressure. For the Bitcoin, we don't have any Bitcoin and overall the cryptocurrency market. We don't have any negative news to say that, okay, that's going to change the market conditions and market trend. From the technical point of view, holding 92,000 and 94,000, as 94,000 as the first important resistance, and then 92,000. Holding above these levels can continue our bullish expectations for higher digits. Next target 101 and then 107,000 US dollars are the next targets for Bitcoin to be touched. However, if the Bitcoin cannot go towards 101, then the downtrend can start at least for short term. That's the general market condition and expectations. If you had any other question, don't forget to write in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.